no matter how long this lasts, I think the state is in a great position to quickly recapture that prior momentum. And we're already seeing it in some sectors like industrial.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom. Hey, I stuttered even on my name starting. What is up with
I
today?
would too.
Okay, so we're going to do this again. Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. I had to think about it because I was a little worried I might stutter on your name.
I heard that
too.
Silverman, it just was an afterthought. It's Silverman.
Silverman. SS, like super Steve.
That's understatement.
So here we are. Our guests can't see, but Steven's been in a bubble when we've done these podcasts. He's in another room, and I forced him to wear a plastic bubble. Apparently, the dog ate his bubble. And so instead of the bubble today, I have UV lights pointed at him and a fan blowing his COVID breath on the other side of the room.
Yeah, speak for yourself.
So I'm
happy to have you in the other room.
So Steven, talk to me. What's going on with you and all the nonsense no one wants to talk about?
There's a dichotomy going on because every day I open up the newspaper and we've been going through a difficult time with all this COVID situation. And yet we're out in the market. We've got boots on the ground and we've been doing deals in leasing and in sales. So I think it will be great today when we speak to Brian Alford and find out what the market is saying from a high level view, because we've been busy as brokers.
Yeah, no kidding. And for me, I've done more office and leasing sales this year than I have in several years. And I think I'm a little unusual in this regard. We do retail and office, probably lean a lot heavier towards the retail, but most of our activity's been on, for me anyway, has been on the office side. So it's going to be interesting to talk to Brian to see if that is happening across the rest of the state as well. Wanted to take a moment before we get into Brian to call out one of our listeners, free $25. It was from iTunes. He left us a review. He says, sometimes the topic is out of my realm, but wow, your guests are smart and helpful. I really enjoy listening and think your format and prep is fantastic. Thanks. Free $25. Seriously, that's his name. That's his name is free $25. That is very much appreciated for our listeners to go on and leave reviews like that. It helps us with guests. Guests want to come on a show that they know people are listening and paying attention so that they're making good use of their time. So you guys who have not done so, we'd really appreciate you going on there and leaving us a review. And for free $25, we are greatly appreciate your effort in going on and doing a review for us. Steven, anything else before we get rolling into our guest?
Well, I agree with 325. Sometimes I don't understand it either, but we got really smart guests and it's always a pleasure to help them.
It makes up for the intelligence gap between you and me.
Well, that's right. So we sit on the sidelines and we listen to our guests, but let's roll into our 30,000-foot overview with Brian Alford. Today we have with us Brian Alford. Brian is Director of Market Analytics in Florida for the CoStar Group. He is a market economist based out of the Tampa, Florida office. At CoStar, Brian analyzes commercial real estate market trends and economic indicators and forecasts summary findings in written form on market and submarket level. Brian graduated from the Georgia Institute of Technology with a Bachelor of Science in Management and a certificate in Finance. Brian, thank you for being with us today at the Invest Florida show.
Thanks, Steven. Thanks for having me.
Hey, Brian, really appreciate you taking the time out of your busy schedule to be on the show with us again. I mean, as a retread, we should be honored that you're back again because you always are providing great information for our listeners.
Yeah, I thought you'd never want to talk to Eric again, but I'm glad you're resilient.
He plants that seed. He plants that seed.
No, I'm happy to be on. Last time I got a lot of positive feedback from all around the state, so it was a pleasure to be on and happy to do it again.
Terrific.
So Brian, we live in Florida. How are we? How are we doing?
We're doing pretty good for the most part. I think the thing I like to look at is how the economies are doing. And looking at Florida, we found really that there's two main trends that have impacted how the economies have proceeded here in the past 5 or 6 months. That is the severity of the outbreak, which really is just in the South Florida markets. Most of the rest of the state held up pretty well. And then exposure by industry. Obviously, the whole state is rather exposed in terms of tourism, retail trade, leisure, and hospitality. And so the markets that tend to have a little bit higher exposure there have seen a little bit larger impact as well. And so if you look at the state, really the markets that have not bounced back as quickly in terms of job growth, Orlando is still down about 15%. I do think Orlando is going to pick up here tomorrow when we get our July numbers. The rest of the state, though, South Florida, it's lagging a little bit. It had to experience a little bit of a longer shutdown, a little bit slower reopening. And for the most part, though, we're moving in the right direction. And we have been now for 2 or 3 months. That said, we still do have a little bit of ways to go. The top 20 markets here in Florida are still well below pre-pandemic employment levels back in March.
Yeah, and some of these are just these areas it's just gonna take a while. I mean, until we get some mitigating drug, it's just gonna be a process. It's gonna be a slog.
Yeah, it's just gonna take time. It's gonna take probably at least a year or more just to get the employment levels back up. But I'm really encouraged by how quickly that most of these markets bounce back, particularly markets that are a little less dependent on tourism. Tampa and Jacksonville in particular have really, really snapped back pretty well and really are moving on an upward trajectory.
Yeah, it's wonderful to hear that because like not so long ago, we were walking down the streets downtown and there just were no cars. But it still feels like things are behind, like people aren't at work. It's just things are working differently. Maybe we can talk about how the different food groups are going and how differently they're working.
Asset classes for those who are not in elementary school. That's Stephen likes to use the food groups as a reference to industrial, retail, office, and multifamily. Right, Stephen?
I'll take those.
Yep.
Okay. All right.
So the 4 basic food groups. I guess the first thing I'll start off with is we'll segue from the economy into multifamily. And I like to do that because we have a daily rent series at CoStar, which is powered by apartments.com. It's the closest thing we have to a real-time indicator of economic impact on a market. And that's because multifamily really is a daily environment where you've got people moving in and out every single day, rents adjusted on a daily basis. The other food groups, the other 3, as we talk about, much longer lease periods. So there tends to be a little bit of a data lag. And so I'd like to start with multifamily. And looking at the multifamily rent series, every market in Florida plummeted in March. Rents really plummeted. In April, as the economy started reopening, we saw most markets flatline. And then fast forwarding 3-4 months, most markets started to improve. 7 markets at this point are below March levels of asking rents. And the rest of the state is actually above pre-pandemic levels. So 13 of the top 20 markets are actually now performing better in terms of asking rents than they were pre-pandemic. The markets that are still down and still looking to improve, probably what you would expect, Fort Lauderdale, Miami, Palm Beach, West Palm, those are still down significantly from March. Orlando is still down significantly. And then the other 3 are, if anyone's talked or listened to any of my webinars on multifamily in the last couple of years, a lot of multifamily construction in Southwest Florida, the Gulf Coast markets, Sarasota, Fort Myers, and Naples are still down. That's just continuing a trend that was already present in those markets. But for the most part, outbreak, tourism, still down, supply obviously playing a factor, but the rest of the state is moving in a very positive direction.
Yeah, it's amazing to me to hear that like 13 of the markets are actually above the pre-COVID situation. Maybe is it possible that the situation caused people to move from other types of housing into multifamily and just a greater demand?
Well, when you look at the vacancy rate, the absorption levels, net absorption in the second quarter in particular, in Florida was down. It was one of the lowest second quarters that we've seen, the lowest in the past 4 years, and one of the weakest of the past decade. So we haven't seen a ton of movement looking at just the data, but a lot of that is tied into, for a month or more by markets, people just weren't really moving. So it's a little bit tough to look at the absorption patterns. Vacancies have held relatively flat, so we haven't seen any real loss of demand. Supply is obviously very high across Florida. We still got about 80,000 units underway. The good news, bad news is that we had our highest quarter of starts for multifamily in the state in the first quarter of 2020, but we have seen declining starts over the past 2 quarters. When you look at it by a submarket level, we have seen a lot stronger rent growth in the suburban markets, a lot less rent growth in the urban kind of core, like in Tampa, for example, downtown Tampa, downtown St. Pete. That could indicate a shifting demand of people moving away from the urban core to a suburban lifestyle, maybe looking for a little more space, a backyard, for example. We haven't seen a huge spike in homeownership to correlate with that. And I would also say that the urban markets are also where all of that construction is really concentrated. So it could simply be a supply issue that's keeping the rent growth there down. But we've seen some signs that point to a potential shift. The real problem here at this point is we're still only, 5 months since this began, 5.5 months. It takes time for, especially when you're talking about people picking up and moving, for that to start presenting in the data.
Mm-hmm. And then you've also, it's a little bit of a false market because Governor DeSantis has through August 31 the evictions and foreclosure forbearance. So, and then it's going to take a while for the courts to start absorbing some of those issues. It's going to be interesting to see how it all plays out. But we are with a little bit of a false market, just because even the natural motion of foreclosures and evictions have been slowed pretty dramatically.
Yeah, I mean, that's a huge point, Eric. The moratoriums, that's a huge part of why the vacancies haven't changed. Obviously, if we're not kicking people out, the vacancy number isn't really going to change. Collections they've been pretty good. They're more or less about 95% going back to April. It's only down about 1% from last year. But a lot of that owes to the stimulus package, which is what we know it's still hasn't been renewed yet. It's kind of going back and forth at the moment. So we are in a bit of a false market in that we're getting some of these numbers propped up by these government aid packages.
Mm-hmm. Yeah, I like to talk about it as describing it as like we're on morphine, and we haven't felt it's just protected, and at least in the multifamily market, it's protected the landlord from pain.
Yep. And I would say thus far, here we are in August. Some of these, obviously the stimulus has expired, but collections are still holding up. They're still looking good in August. If you go back to the first couple of months of the stimulus package, savings rates across the country skyrocketed. So it looks like there's a good chance that a number of renters may have converted a lot of that extra $600 a month or a week to savings, which might buy us another couple of months here until we start to see real impact in the data.
Wow, that's certainly news. The United States and citizens of the United States have been some of the lowest savers on the planet
in the world. Absolutely,
yeah. And it's interesting that when their back is against the wall, they actually do what they're supposed to do and put some away for a rainy day. That's really encouraging news.
It's encouraging, but the savings did start to come down a couple of months in after the lockdowns expired, and along with a rise in personal consumption and consumer spending. So
I spoke too soon.
I don't know how much runway we have, but hopefully that'll buy us maybe a couple of more months.
Okay. What markets have you seen that have sort of fared better than others in Florida?
In terms of, we'll talk about the construction markets. I think that's the biggest factor here in Florida. A lot of construction all across the state. We're just going to keep it to the top 20 markets, but 15 of the top 20 markets are building above the national average in terms of square feet of existing inventory. There's 6 markets that are building over 10%, so really rampant supply. Fort Myers, Naples, Sarasota, we talked about those earlier. A lot of supply going on there, about 3 times the national average. In the case of Fort Myers, it's about 23% of existing inventory underway. And so those markets have seen loosening vacancies. They're in double digits or above for vacancies. They've seen really weak rent growth. And so those markets are certainly not faring as well. I guess the good news there is it's really tied to traditional demand supply patterns. We're not seeing really any impact from the virus at this point or the pandemic. In the markets we talked about earlier in terms of South Florida and Orlando, those areas have certainly seen asking rent losses since March, and they have not picked back up since. And you can see those are really, really tied to the actually pandemic and job losses. Other than that, the rest of the state's doing pretty well. Most of the state of Florida is in positive, as we talked about, 13 of the 17 markets. Many are seeing very, very strong rent growth. Tampa, Jacksonville, Melbourne, those are all above 2%. Pensacola is well above 2%. So at this point, it's really still just the markets that got hit hard by the pandemic, severe outbreak, and then supply levels.
Let's move into a little bit in the, as Stephen calls, the food groups.
Absolutely. So which food group do you want to talk about?
Let's talk about retail. That's one that's in our face every day.
Yeah, and I feel like every time we talk about retail, I have to put a big caveat in here because every time we talk about retail, the general consensus is, oh my gosh, retail is going away. And it drives me bananas because you have to separate big box retail, the Sears, the JCPenney's, Dillard's, Best Buy from your street level and your grocery. And it's only the internet related, the e-commerce related retail centers that are having a transition. I'm not even going to say they're struggling. They're having a transition. Yes, there's going to be vacancy. But anyway, I need to preface that before we go in because there's always this confusion when people talk about retail. They just think it's dying. The whole sector is dying, and it's just not true. Anyway, I'm sorry to interrupt, Brian. Go ahead.
Nope, that's a perfect point. We talk about this frequently. We're going back in history a little bit, but the so-called retail apocalypse really has largely been a myth. Retail has been doing great across the state and really across much of the nation, other than maybe power centers or malls that have exposure to those big boxes. So retail was entering this in a really good, strong position, near record-tight vacancies all across most markets in the state. And for the most part, we haven't seen a lot of slippage. Retail fundamentals have held up relatively well. We've risen about 50 basis points on the average vacancy rate since 19 Q3, so in the last year. But most of that is tied to an increase in supply, which I know sounds weird, but Florida is actually adding more supply than the national average. That said, it's still just a shadow compared to what the supply was a decade or more ago. For the most part, demand has held up well, but I do want to say here we are in mid-August. If you look at the data through the end of the second quarter, for the most part, it was okay. We did have a negative second quarter in terms of negative net absorption for Florida retail. It was the first quarter of negative net absorption since 2012, but it wasn't too bad. It was about 380,000 square feet. Obviously, that's likely tied into the pandemic. But as we look at it here in August, mid-August, we are now down about 650,000 square feet. So it looks like retail is probably showing the first signs of potential pandemic impact. And a lot of those vacancies, I talked about a 50 basis point rise over the past year. That's also come here in the last 2 or 3 months. But most of it is tied to some of the announcements that we've heard about, those big box stores, the Macy's and Pier 1s, and some brands that are probably coming up soon here in Florida. Steinmart's going to have a few. So no surprises. We're probably going to see vacancies loosen a little bit more. But we're still at very, very tight overall vacancies and maybe some weakening in some of these larger centers. But I mean, we're talking about a state with an average vacancy rate that is still under 5%.
And we talk about the 3 F's of retail. and food, furniture, and fun. Those have been the drivers in this transition from e-commerce to more experiential type of retail shopping. And the fun and the food component of those three F's have been the ones that have been affected the most. You can't go into a gym, going and dining in is an issue. I'm wondering if you're able to break down. It's okay if you don't have that data at your fingertips, but I'm wondering if you can break down, what those two F's that are the food and the fun piece of it, what you're seeing there. Because it has been the driver. Like they've moved in big time, and they've taken over a lot of this retail space that has been opened up. And I'm just curious how they're faring, because you can't get people into these facilities until we have some mitigating drug.
Yes. Well, food is obviously holding up great. There was a huge surge in panic buying, obviously, in March and April. So the food component, I think, is looking very well. I guess the real issue here, looking at the data, is that we're talking about pretty long leases. And for the most part, we haven't seen a mass exodus of any of these, like fitness tenants or movie theaters or any of the experiential retail, Dave & Buster's, for example. We're not seeing a rise in vacancies in any of these. So from that perspective, they're still holding up. But obviously they can't operate with a profit margin with the way things have been, bars, for example. So it could just be a matter of time until that starts working into the data.
Mm-hmm.
Yeah, I mean, to be honest, like we see it on the ground. Like just today, we had a little karate studio in the strip center we manage, and they can't pay their rent anymore. And, we have a dance studio that's got issues, and a little restaurant, and then you have the liquor store who's doing great. So,
yeah, it's really bifurcated. It's very troubling to me. We used to be a country of entrepreneurs and small business people. And little by little, there's been the erosion that's occurred over the past 30 years of the little guy. And this is really separating big guy from little guy, because the big guys have access to the capital markets. The Dave & Buster's and the large chains still have the capacity, because we know this is temporary. They're able to go into the capital markets and get cash flow to tie them over for a few months, 6 months, 9 months, whatever, a year, 2 years, whatever. But these little karate studios, they have access to nothing. When their PPP runs out, it's gone. And I'm really concerned about what's going to happen to the little guy. Are we just going to see a flushing of these smaller businesses, particularly in retail, restaurant and karate guys and gyms, and how long is that phase going to be, and how many are going to end up being victims of this disease and what's going on?
Yeah, I think there's a huge chance that I think this is a very likely scenario for a lot of the smaller retail, especially those in downtown environments that depend on daytime traffic. Downtown Tampa, downtown Orlando, we've seen some closures, not enough to move the needle on a fundamental basis, but Wahlburgers and retail and restaurants that have closed. And so depending on how long this pandemic lasts, if it comes back for multiple waves, if it goes for another year, 2 years, then yeah, I think we're absolutely going to see a lot of these smaller retail karate studios, bars, restaurants that are going to close down. I guess the only thing here is I can't really say how long the pandemic's going to last. So we're a little bit at the mercy of that, but that's going to be the key factor on how long this economic recovery, how long the pain endures, and how quickly we can get back to normal and hopefully start getting some cash flowing into these businesses.
So that was the first food group, and I'm feeling now a little depressed. So maybe we can go into another food group that would help me.
Well, how about this? Before we leave retail, let me give you some positive news for retail then, okay? I don't want to leave everybody in a bummer. So if we look at sublet activity, that's one thing we track for upcoming weakness in the market. And Florida retail sublet activity is actually down in 2020. So we haven't seen an increase in available sublet space in retail in the state of Florida. We're actually 70,000 less square feet than we were at the end of 2019. So that's a very positive sign. As we talk about the other food groups, you'll see it's not the case there. So I find that very positive, at least thus far. We've also seen rent growth hold up relatively well. We're still positive in all markets in Florida. Florida is one of the best, all the markets are some of the best retail rent growth markets in the country. We're one of the strongest retail markets, pick a market, but Orlando and Tampa are still seeing 5% annual rent growth. And that's with a little bit of decline here in the past quarter. So retail here in Florida is, we're feeling the pain as everybody else is, but we're in a very good space to where we can absorb a blow, a body blow or two, and still probably, hopefully emerge on the other side outperforming the national average. So hopefully that gave a little bit of positive spin.
Yeah, that's a nice little upbeat note to move into industrial. We're not going to talk about office because people are going to turn us off. We talk about office. We'll talk about office last.
Okay.
Let's talk about industrial next. So let's talk about something positive.
All right. So yeah, industrial is obviously the most positive, right? Non-store retail sales have picked up since February. They're up about 20%, and that includes e-commerce. And so industrial was already doing really, really well heading into this. We had seen rising vacancies across Florida, but most of that has come from just increased supply. We've really ramped up supply here in the past 2 years or so. We added 23 million square feet last year, and another 16 million square feet have delivered already this year. So we're already at 40 million in about a year and a half. So a ton of supply. It's moving up the vacancies a little bit because a big chunk of that has been, or an increasing chunk of that has been speculative. But leasing patterns holding up very well. We've seen many markets. Tampa, for example, had a stronger second quarter in terms of leasing activity than the first quarter. Orlando's second quarter was actually the strongest quarter for industrial leasing activity in the past 3 years. So leasing activity industrials held up well. That said, it has fallen just a little bit here in the third quarter, but leasing activity tends to lag for a couple of weeks. I suspect by the end of the third quarter, it'll be the same or about maybe even higher than the second quarter. So really, really strong leasing activity, a lot of momentum across the state. Supply is decreasing, which is good. It's still elevated, still heightened. We have seen a drastic reduction in starts here in the past 2 quarters. So that's probably to be expected with what's been going on. But I think supply, for the most part, is manageable. Really, the I-4 corridors, the only area that really has appreciable supply that could be maybe potentially too much at the moment, but I think that's okay too. Daytona Beach, Lakeland, and Orlando are all building above 2% of existing inventory, but that's just slightly above the U.S. average. So supply looks good. Leasing volume looks really strong. Vacancies, fundamentals have held up pretty well. Sublet, we have seen here in the past few weeks an increase, but only 400,000 square feet. Obviously, with industrial, it could just be 2 or 3 spaces. That's not a massive shift. And when you look at it and you compare it to 2009, we've got far less, way below the available sublet space in the market than we had. We had 9 million square feet in Florida in 2009, and we're way below that now. And so everything looks really good. The sublets are fine. That looks good. Rent growth, a little bit of a hit in the second quarter, but we were already trending downward, mostly again due to that heightened supply. And so for the most part, I think industrial is looking really, really well, especially that I-4 corridor, particularly from Lakeland through Orlando and into Daytona, which has had a lot of movement lately, including that Amazon facility that's underway.
Industrial is certainly, I mean, we see it on our end, a lot of activity happening. It's certainly where I'm getting the most requests from. So that's consistent with, I think, Stephen and I are seeing too. Anything else on industrial before we move on to office?
Just a question. Does the data say anything about the impact of the Panama Canal on the industrial space and distribution?
Well, yes. And we're going back a little bit in time here, but yeah, we did see a boost. We saw a boost in port traffic, and we've seen some boost in industrial activity. The main thing with Florida, though, other than maybe Jacksonville and South Florida, the ports don't get a ton of traffic, especially the Gulf ports here in Tampa, a lot of raw materials. So we've seen a boost, but nowhere near Mobile or Savannah or some of the other Atlantic markets and ports. But it definitely made an impact.
Let's move on to office.
And that's a complex one because everybody talks about how we're all leading different lives. Like, Brian, you haven't really been into the office for 4 months, right? You're doing everything.
Yeah,
You lost a month,
5
Stephen.
months.
You were sleeping for a month. It's five plus months.
5 months. Well,
Yeah.
time flies when you're having fun.
That's right.
Yep. So office, this is the one we get asked about the most. Even when I'm talking about multifamily, the questions always come back around to office. Everyone wants to know, is it the depth of office? Are we going to all shift to working from home? Footprints are going up. Footprints are going down. Square footage per employee. As we'll talk about the data, I mean, really at this point, it's still too soon to tell you if we're going to have some kind of shift. I suspect there'll be some pullback. Some people will start working from home. But I don't think we're going to see a seismic shift in the office market in terms of a big shift. I think for the most part, most users are going to move back to the space. And with the leases being, 3 to 5 years or more on average, it's definitely going to take some time for that kind of a monumental shift in how we go about occupying office space to present the data. If you're looking at the data now, we're looking good. The fundamentals, vacancies have only gone up about 50 basis points. If you look at it market by market, 10 or 20 basis points across most markets. So it's still near record low vacancies. We did have a negative quarter for absorption in the second quarter. It was over 1 million square feet across the state. And that's the first time we've seen a quarter that low since 2009. So we definitely had a little bit of negative net absorption there, which could be an indicator. But when you look at construction has been moving downward for the past 4 quarters. Starts have fallen really off a cliff the past 2 quarters. So under construction space, that's not really a concern. It's not like the last recession when Florida was way out over its skis, especially in some of the central Florida markets that just got hammered with rising vacancies. And so for the most part, it looks pretty good. When you look at office leasing volume, the second quarter, there's 2 ways to look at it. And if you look at the quarter, the second quarter of 2020 was the lowest quarter in 10 years. But if you break it down by month, you get a completely different pattern. There was almost no leasing activity in April when everybody was sheltering in place. It was one of the lowest months we've ever recorded. But then if you look at May and June, it looks like there's a lot of pent-up demand. May was about 25% above April. And June was one of the stronger months that we've recorded in the past 4 years. So if you can adjust for the lockdown period, office leasing volume and demand, it looks like it's right where it was pre-pandemic. We're seeing leasing activity across the state, at least as of today, that's really in line with historical patterns.
And are you seeing any difference in moving out to the suburbs, or is it still staying in urban? And also, what about the class of office space? Is that having an effect?
Well, we haven't seen a big shift in the data to represent that yet. You see anecdotal examples, such as Tervis in Sarasota, who is downsizing and moving from their headquarters to a smaller space. And you'll find anecdotal examples of suburb and people moving. But for the most part, most of the markets, there's just not a ton of available space. Tampa, Orlando, most of Florida. We don't have just open suburban inventory just sitting there that could facilitate that kind of a move. The financial hubs are still going to be in the downtown. I suspect most of the financial activities and brokerages and things like that are going to still want to be located where all of the new supply has been concentrated. And at least as of yet, we're not seeing really any shift. We're not seeing a mass swing in terms of vacancy levels or absorption in urban versus suburban. And really, to be fair, though, I think you're going to, at this point, if you're an office occupier, I don't know how you could make that kind of decision because we still just have a lot to learn. We don't quite know how this is going to progress. We're still kind of in the middle of it. And so I think we're going to see a lot of firms continue to kick that can down the road in terms of making that decision and kind of putting it off. So it might be quarters before we start to see something you can identify as a trend in the data, at least.
Yeah, we experienced some of this before. I mean, we operate our shared office space, which has just been devastated by COVID, the shared office space. But, we experienced it before. And it wasn't like we didn't have Skype before. People could make conference calls or video calls, and we were actually using an IBM product in 2010 or 11, I think, when all this went down. But what happened and why shared office space exploded from 2009 on was companies could not build a culture working from home. And, those tools like Zoom and Skype and whatever, Google Hangout, they're adjuncts, they're tools, they're supplements to a company's communication and efforts. But you just can't build a culture through those. And so what we saw last time is that people came back to the office. It took a little bit of a different form. And of course, with Zoom and these other products that we have out now, it's going to continue to evolve, and it's going down a path, accelerated a path that we were already on. But the office space is not going away. I mean, this is the section of the food group we talk about that most people, you have the biggest apocalyptic predictions happening, and I just don't see it. And your numbers are backing it up, but of course we still don't. It's kind of like wondering who won the game, and we're in the fifth inning.
Yeah, I just on Eric's point, do you see anything in the data, or does it tell you anything about shared office space? Because there's so much inventory coming, and how that's trending, or is it too soon to talk about that?
It's still too soon. I can tell you that with Venturex, there's all the co-working space that's been going on, Venturex in Naples and all the space in Tampa and Industrious, all that's still proceeding. The only area that we've seen really anything is WeWork has pushed off their opening in Tampa and in Orlando. Their Central Florida expansion has been delayed until August 2021, but WeWork also obviously had its own issues well ahead of this. So at least as of now, they're still operating as they were before. Obviously, if you drive by them, you can see that they're not getting the foot traffic or the people in there that they used to. But for now, the data looks more or less same as it did before pandemic.
Okay, so we did industrial, we did office, we did multifamily.
Is there any other point that you want to talk about before we let you go, Brian?
I think we hit all of it. I guess I would just say I want to reinforce kind of what I did with retail, that while all this sounds bad, and we're talking about some of the worst quarters in years, 6 years, a decade, we effectively shut the economy down for over a month in some areas. And Florida really entered this thing in great shape. Nearly every market, a few areas of weakness. I hit on a couple of markets with multifamily construction levels that were a little concerning, but by and large, the state was in phenomenal shape for the most part. A far cry from what it was prior recession, when we were just overbuilding almost across the board in property types. And no matter how long this lasts, I think the state is in a great position to quickly recapture that prior momentum. And we're already seeing it in some sectors like industrial. So things are bad, but they're bad all over. And in my opinion, I think they're relatively much less bad here. And I'm pretty bullish on the majority of the state.
Awesome.
Well, Brian, we'd love to circle back with you at another point and talk about some other areas in some detail. But this was a great overview on Florida. And Brian, if people want to reach you or want to talk to you about deals or contact, how can they best reach you?
The best way to reach me would be to email me at balford, that's BALFORD at CoStar.com. You can also reach out on LinkedIn. You can find me, Brian Alford, CoStar Group, and message me there. That'd be the two easiest places, at least as of now, while I'm working remotely.
Right. While you're not using your office.
Right.
Brian, we really appreciate the time that you invested with us today. We look forward to having more conversations with you in the future and paint a little bit better a picture as things move forward as we start to come out of the COVID mess that we're in right now.
Great. I would love to come back, talk about anything. Thanks for having me.
All right. Thanks, Brian. Talk to you soon.
All right. Thanks, guys.
And that was Brian Alford from CoStar Group. Stephen, what were your thoughts?
So for me, that was a great overview because we open up the newspaper every day and we see these dire straits that people are in. But to stand back and really look at the data from afar, and you can tell that really we're not in such bad shape. In fact, they're saying, Brian is saying that the forecasts are pretty good and Florida will come out okay.
I don't want to marginalize anyone's pain. There's more pain to come, but April was the worst month, and the trends have been positive pretty much in all of the asset classes since, and there's reason to be optimistic. And besides the fact that we're just hopefully months away from some of the emergency use of the vaccines that are in phase 3. There's a lot of money that's been put in, and there's more coming in to try to stabilize things. Hopefully April is in the rearview mirror. That was the worst, and we've seen the worst of it, and it's just going to be incrementally better from here on out. There will be some bumps in the road. Don't get me wrong, because school coming back out again and perhaps another wave coming, and there's going to be some twists and turns in the story. But I do think that we've seen the worst of it behind us, and hopefully we're just working towards how to get a mitigating drug and mitigating a procedure that will allow us to go back as much as we possibly can to business as usual. Stephen, Brian was a great guest. He always provides us great information. For other great guests, where can our listeners go to get that?
Only one place, and go to our website, www.investfloridashow.com. But also download the app on your mobile device and listen while you're mobile, on the road, or in the gym. We have great guests and great information.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.